Hi, I'm Sunil Goyal, Managing Director and Fund Manager at YourNest Angel Fund. YourNest is an early stage venture capital fund. We promise to handhold the entrepreneurs, the startups at the discovery phase, when they're innovating, when they're experimenting to the peak. Help them realize their dreams of building a business that is impacting the society at large, thereby maximize the wealth for investors. So that's YourNest. See, the global economy is going through turbulence. This is the opportunity for the Indian government to allow innovation, entrepreneurship, and investments to flourish. This is the only way we can have economic activity pick up. We just need, without hesitation from the Union budget, clarity, consistency, and parity in the taxations for startups and venture capital funds. If I break it into three parts, for venture capital, startups, and pooling of resources from the domestic market. For venture capital funds, we must have that there's a pass-through benefit to the investors. But then why have 10% withholding tax? Any capital gain made on the investments must be treated as capital gains and not as business income. No doubt around that. Any losses made in an investment in an AIF should be allowed to be set off against the capital gains made by an investor. You know, the investment in startup is far more riskier and illiquid compared to public markets. It just has to ensure through securities trading tax or STT that there is a parity with the public markets for this much riskier investment. On the end of startups, it's a long pending demand that the startup tax, which is under section 56(1) or 2, etc., should be done away with, at least for angel investments who are making angel investments. Today, any startup when they start, 24.5% of their capital, of their revenue is blocked either as 10% withholding tax or 14.5% service tax. Something needs to be done on that. You have announced as action plan for startups that the income tax exemption is going to be there. Make it feasible in a manner that 24.5% is not stuck of the startups during that particular initial phase of 3 to 5 years of their inception. Lastly, domestic pool of capital. It is huge amount of capital is there with charitable institution. Just the Income Tax Act is not allowing them to invest in long-term assets like venture capital funds. Allow that. Similarly, as action plan of the Startup India, please make sure whatever steps you're taking to encourage the individuals to invest in startups is implemented and notified maybe much before the union budget, and alongside the union budget much more to happen. I believe this will particularly encourage many investors to come forward and support startups in India.